hear Tweety Bird. Yeah, you should probably hear the Tweety Birds. Yes, yes, yes. So it looks like the red bar is moving, so you guys should be able to hear me. The birds will probably be loud tonight. The microphone I'm using is kind of pointed in their direction, so if they make some noise, you will hear them chirping. And they've been energetic tonight. They've been pretty loud. It's probably because they want some water. Let me message the wife real quick and say, hey, can you bring the birds need water? I should have checked that before I started. Hold on one sec. Birds need water. There we go. All right. So, yeah, you can hear the birds. You should be able to hear me okay. And we will go ahead and get started here. The baby's going to come in too. I want to start talking. The birds are very interested in what's going on. Yeah, so it's interesting. So I used to use the headset microphone, and they were used to that. But now that I have the kind of boom mic that comes in from the side, it's a little bit clearer. Doesn't seem like it cuts out as much, but it does pick up more information. So yeah, so they can be quite loud, but it points and pulls sound from a specific direction. So you can hear behind it, but unfortunately they're sitting in front of it to the right of me. So hopefully not too bad tonight. We will see. Yeah, sounds good. All right, cool. Thank you, Sean. I appreciate it. All right. Yes? Are you going to help? Are you going to help? They're like, wait, why are you looking at us? Why are you staring at us? Why are you doing that? All right, so overall today, markets are actually pretty good. This consumer confidence number at 10 o'clock this morning turned out to be a nice little, boom for a couple different pairs. Oil was, gold, great trade setup today. Went right off of our touch bracket. You guys saw the video that I posted earlier talking about the setup. Ended up hitting in the middle of the European session. Stabilized, and then we'll go over today, but the consumer confidence number shot that thing right back down again, and then obviously it turned and popped right back up again. So a lot of trading opportunities off that consumer confidence number today. And again, it's one of those ones. It came in slightly lower, and the market had kind of prepared for that, but it wasn't as bad as it could have been, right? And then we had the CPI number coming in for Australia in about 25 minutes. So overall, not a bad trading day. As far as any huge unidirectional kind of trending, not really. I mean, looking across at the kind of 24-hour scanner up top, you can see, euro dollar only up 8 pips again. So another very minor kind of moving day in that pair. Again, that one's been rather blunted. Pound up a little bit more, only 29 pips. And again, speaking of the pound, up 29. You know what? Hold on, let me open the bird's cage and let's see if maybe they will fly out and not make noise today. Come on, if you want to come out. There you go. Come on. They're like, oh, cage door's open. What do I do now? Freedom. Yeah, so as far as the pound goes, we had up 29. It pushed the euro down a little bit as well, too. Oh, excuse me. Oh, I was like, that sneeze is coming. I'm not stopping it. That one pushed it down just slightly, minus 14. And again, euro just seems like it has absolutely no movement at all. So down 14 for there to help the pound a little bit more. And then pound yen actually was down 55. So not a huge day down in that one, but slightly. And again, it's been retracing in the last 60 minutes or so. It's up 0.07%. So, again, rather blunt today. The ATR on that one should be almost completely back to normal. Big mover of the day, obviously, is the euro yen down 70. Swiss is down about 20, which is really, that's even small for the Swiss. Dollar CAD down 72. That's about where it should be ATR wise. And we talked about this last night that we didn't see anything that would show a really slowing down of the CAD right now. The CAD is continuing to strengthen, even though oil is just kind of doing its thing. Interesting enough, I don't know if you guys had kept the same chart up that I did for oil, but because I did the presentation this morning for Nadex, I left it up and talked about where we were, and it's pretty interesting to see where we've moved and where we've turned off of. So we'll cover that one. Now, the Aussie dollar is up 56. That's a respectable day. Not too bad, right? A little bit of upward pressure in that one. And a gold, again, that goes with gold, but gold was up and gold was down. Kind of a little bit jumpy today. So that was one that, again, tradable, sure. Yeah. So looking at the major news and the latest news stories, I like this one. Kiwi fruit gives March exports the golden glow. It's like, if we're talking about kiwi fruit. This is interesting too. You see Market Watch, US GDP in the first quarter is going to be bad. Sure, it's bad. But one of the things that's a little bit different is this is, because this is an actual specific, well-definable kind of issue. It's not like if just the economy was doing this by itself, or we expected 18 months of recovery, or, loans defaulting left and right. People are not working, but once people can go outside and restaurants start opening up, people need to start working again. So it's one of those things is, we're hearing things now of people, starting to, what are the reopening plans? Once, they can go out and restaurants reopen for a business, who's going to work them? So again, we're going to see some of these GDP numbers kind of spring back. So, again, I think this is the news kind of taking this out of control a little bit. And again, White House warns, of negative shocks before a rebound in late 2020. So, yeah, okay. I mean, it's, talking about the negative is much better than talking about the positive. So, I like this one. Dr. Fauci warns the U.S. could be in it for a bad, right? Everybody said until we come out with a vaccine, there's a potential chance of it coming back. And again, we're not going to be protected. You're seeing countries that did not do this type of thing, that they have like a herd immunity forming. And I mentioned from the very beginning that I think extending this out even longer, could be actually more detrimental than, its short-term, issues. So, we'll see. I mean, we're not going to know until it's officially over. They're building and trying to research and find vaccines as fast as we possibly can. But if there's some type of herd immunity to the whole thing, then yeah, we kind of screwed up. You can never do the right thing. There's always going to be a Monday morning quarterback, somebody telling us that we could have done it better, shoulda, coulda, woulda, I told you so type situation. But at the end of the day, we've never really seen anything like this. And, again, this is going to happen again. It's how do we deal with this going forward? As far as I've heard, and maybe I'm wrong, I've missed it, I haven't heard of us running out of beds anywhere. I haven't heard of us running out of masks anywhere. It was all these things that were going to run out until the end, and I've heard none of those things. So it sounds like we were well, like I said, we got the gear that we needed, right? I know some places are, like Maryland, we're opening up a second wing to deal with the cases, but we had expected to do that from the very, very beginning. So it was kind of like, yeah, they'll come online when they can come online, and now they've come online. But we're seeing, hospitalization rates start to slow. So we'll see. And what this has to do with the markets is once we turn and once things start opening back up again, all these jobs are coming right back. I think for the most part, because this is such a shorter duration thing, any of the large companies, I mean, there will be small companies, obviously, that suffer so much that they just disappear. But in a lot of cases, they can reopen back up again. And they may actually reopen in a better situation. I mean, think about it. If you had a business that, maybe didn't have a storefront or any of those things, and it was able to shut down or even got some government loans and things like that, but wasn't having the outlying expenses, and it gave you the ability to go in and work in the office and make things better. I mean, there will be businesses that fail, but people may reopen new businesses with fresh, clean balance sheets and better focus and better products and things. So there could actually be a whole lot of good from this. It's, that kind of one step back, 2 step forward. That I think is definitely something. Now, the telework will be interesting as well. Will there be more of a field of telework going forward into the future? And what does that look like for productivity? What can teleworking do for the GDP? I mean, think about it. If people at this point have been able to kind of navigate the teleworking experience, right? What could, think about it. Who are the people that, maybe there's more jobs that will be open in telemarketing. So people that maybe in the past were disabled or were unable to go to work or weren't able to afford going to work, or maybe working, mothers that, have children. More people may actually be able to telework, and we may actually see unemployment rates go even lower than what they were before, and utilization. So there's actually a lot that can come good from all these things. So it'll be interesting to see. So that's why I just laugh. It's like, when you see all these things, it's like, oh, it could be negative. It could be bad. This quarter could be bad. Sure. Everybody knows the quarter is going to be bad. You're not telling us anything we didn't already know. And then what are they saying? The damage is far from done. All right, so what? We shrank, 3.9%. But again, people are at home. People are not doing anything. People are going to leave their houses. People are going to buy gas again. People are going to go out to movie theaters again. Okay? People are going to go out to gyms. People are going to go out. People want to leave. People want to do stuff, right? All these things will come back again. It's not like, there was a earthquake that wiped out and knocked down every baseball and football stadium in the entire country. They all still exist. They will be used again. Trust me, there's a lot of money out there to be made, and people will want entertainment. All right? So, yeah, movies. Q, what are you missing movies for, man? Just open up your window. It's New York City. You have a movie playing every day. There's always something new in New York City. It's never a dull moment. I will say that one of my favorite memes out right now, or some like videos on like Instagram. Have you guys seen the boars that are running through the city? I forget what town it's in, but it's like a pack of boars. There's like 30 of them that are like literally running through the streets, and people are like, nature's taking back over. It's like, yeah, boars will do that with people there, I don't like that. I don't like the pen. Contagion is not your favorite movie, Q? I mean, Contagion, right? That was the one that, wait, what oh no, that's it's not Contagion. It's what is it? The Korean movie. What is it? Parasite, I think. The one that has the subtitles, right? Is it? No, it's, I think it's Parasite. Isn't that the Korean movie? Like it's like the zombies or whatever on the train or something that's gotten like all this. I think it's the flu. I don't know. I don't know what it is, but I think it's zombies or something like that. But yeah, that movie. It's kind of like that in New York City. All right. So obviously expect bad numbers, but the market Train to Busan, maybe. Is that what it was? I thought it was called Parasite, but it could be Train to Busan, maybe. Maybe it's a foreign film. I know that there is a train involved with it, but I thought it was newer than Train to Busan. But yeah, it's whatever. Yeah, we'll see. Japanese yen breakout versus the dollar in focus as stocks wobbled, and we'll see what that one looks like. I don't know if I'd say it was quite that much of a breakout, but we'll see. All right, so scanner wise. Last 2 nights, I haven't really covered the scanner that much because it wasn't giving us a whole lot of kind of true direction. And the scanner is only valid when kind of ranges have returned, zones are normal again, and kind of what we're seeing today. And the reason I want to highlight today, not that there's a lot in here, but I did want to highlight one thing. I mean, seeing 24-hour pip moves in the euro, right? Seeing 12 over here, minus 15 over here. Well, look at the euro scanner. So the important lesson is not that the scanner is not good. The scanner is great. I love using the scanner. But you got to understand the tools that you are using. Right now, look at the scanner. Everything is sideways, down confirmed, or up confirmed, regardless of time frame. And then again, there's some setups on the lower time frames. But for the most part, again, are things moving? Yeah, it's saying it's confirmed, but it's moving 12 pips. It's moving minus 15 pips. So using tools, and again, this is why I'm very anti-indicator. Using tools, they all have limitations. You have to know the limitations of the tools that you are using. And this is one of the limitations. And this is why I haven't been highlighting the scanner as much lately, because we're seeing kind of this shock and this like small movement again, everything is being consolidated. So it needs a little bit of time to kind of move these high kind of volatility moves out and bring back normal moves in. Okay. And you're seeing across the scanner, I mean, the one consistent trend all the way across the scanner is you're seeing a lot of check marks, right? A lot of confirmed sideways, a lot of concern. Right here we have confirmed up, confirmed up, confirmed up, confirmed up. The euros are all kind of weird. The CAD basket, look at the CAD basket, right? Aussie CAD is confirmed up, but then CAD Swiss, again, switching base and quote positions, it's up. And then we switch back again and we're up again. And then down here, we had this one here, but these two over here, these are both down. So what does it mean? Right? And then there's consolidation with the euro over here with the Swiss. So what this means is with all this consolidation in there, it's basically the volatility being shuck out of the market. Okay. So that's why it's important to understand. Aussie, again, Aussie is pretty interesting. It's solid blue all the way across again, showing that there's Aussie strength. And again, this could be, somewhat with gold, but I think a lot of this is the fact that, Australia data and and New Zealand have basically kind of moved beyond the coronavirus threat at this point. And again, because they're the first ones out, remember, this used to be nothing but red every single day. Red, 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 every single day. Now it's getting into the blue stage because they're coming out the other side. All right. So, just a natural cycle. Now, pound for the most part is still positive. Again, but it's small positive, right? I mean, up, 36 today versus the dollar. I mean, again, it's confirmed up. Pound yen is telling us it's up. It's confirmed in the lower 2 time frames, but yet it's down 48 pips today. So it is still inside of those kind of larger candled moves. And again, we have to work those out of the system, That's just a limitation of this type of trading. And then again, versus the Aussie, New Zealand, those are the first 2 out. Obviously, it is showing weakness towards those 2. It just makes sense. Those 2 are the first 2 out. Okay. Nothing, if we had another window up here and we had, the Chinese currency versus everybody else, you would also see that as well. That because they were the first to emerge, they would also probably be blue against everybody else out there. All right. That's not a movie that is real. Yeah, maybe, right? Maybe. Boars are brutal at a bunch of them out of the farm here, and they opened up on. Yeah, boars are pretty crazy. I actually did some hunting in North Carolina on some boars, and take it what it was. People were like, "Oh, killing animals is bad," but like these boars were like tearing up all the farmland. They broke down a fence. They killed a couple other animals. I don't know. They were pretty crazy. Like I was like, "These are regular pigs." They're like, "Yeah, well, these are wild boars." But those other things you see there, those are pigs that they broke out, and now the pigs have turned feral, and the pigs basically look like boars. I'm like, what? I thought pigs were just basically covered in mud and pink, right? And they said, no, once they go feral, they grow tusks, they get hair all over them, they get huge. It's like, what? You have like this 700-pound monster running through it, these little these like 6-inch razor sharp tusks. Yeah, yeah. Bacon bites back. Bacon bites back. Yeah, boars are pretty crazy. The amount of destruction that they cause is it's unreal. But yeah, so when they were running through the town, like, oh, look at the babies, they're so cute. I was like, yeah, but see those two big ones over there? They were literally smashed through a car just trying to, get you away from those babies. So yeah, Aussie news tonight in about 12 minutes. All right, so with that being said, let's go ahead and jump in. Let me bring this over across here, get that out of the way. There is silver. Silver's up in a zone right now. All right, let's see. We'll go up to, we'll start with Aussie dollar. Now let me switch across to charts. So right now the bird is sitting on my shoulder. So if you guys hear some chirping and like some crunching, it's because it's like she's like literally right next to me. All right, so on the daily, you can see we've pulled up the zone that we talked about before. All right, on the 4-hour, hourly. So we're kind of sitting up right in that zone. This was a zone that we had marked off, talking about, hey, listen, we're at the very, very peak of it. A little bit of an aggressive entry, and it looks like it has pushed through the kind of the aggressive entry area. It did take one bounce and it went about halfway through, and now has pushed up into that kind of larger time frame zone that we were talking about. And more or less, it's just sideways movement. I mean, this position is up about 56 pips today, but for the most part, I mean, we're traveling between, you're talking about a 30 pip area top to bottom. Now, it is interesting that it has pushed up. You can see there is a little dotted line in here. Let's see, that dotted line. Let me see, where's that coming from? Oh, that's where it's coming from. There we go. I'm actually going to remove, let's see, let me remove the white. Oops, I deleted everything. That's all right. There's where we can see a zone coming in. And this is an hourly zone. All right. So with an hourly zone sitting right up there, pretty interesting. 12 minutes. We got pretty close. I don't think we're going to continue to jump that much higher. I was looking actually at the 30-minute zone being what we were going to, but it actually pushed a little bit past that. No, she wants apples. This girl loves apples. She's actually have a hoodie on. She's actually eating the string of the hoodie right now. But she's a big apples girl. She loves apples. Apples are by far her favorite. Peanuts, not so much. Crackers, I don't think. I mean, she'll pull a cracker in just to shred it, but apples are her favorite. Not a big bananas fan either. But anyway, we were starting to pull up in this zone, and here, let me put the overlay so you guys can see it. There you go. You guys can see the dots up there where it's coming in at. Not a bad zone. And like I say, we'll see what the CPI number does. It's pretty close. I was hoping we were in there, but there actually may be some short opportunities in. Let me pull up Nadex platform real quick. Oh, hold on. There's a new notice up there. Oh, no weekly daily binary gas contracts. No Germany 30. Everything else is just normal. All right. Here. Let me pull this up. Boom, boom. Whoops. Go. Pull this out. Pull this up. All right. So, let's drop down to 15. What is this doing in this lower time frame? Yeah, it's starting to pause up there. Would have liked if the pause just a little bit higher, but unfortunately it didn't get up that high. So let me see. See, 9. Trying to see what we had in this one. What type of premium they had jacked into this one. Let's see here. What do we got in here? So right now we're currently at 65.14. It's already starting to move. I was like, don't move, don't move. Yeah, right about here. Where are we at? Yeah. So we're sitting right here. So this one, I mean, this is a 2-hour binary right now. It looks like, I'm talking this 1, 2, 3. It's talking about basically four strike prices to the downside on this one. There's a small short here, guys, that has about $17 worth of risk. This thing moves about 10 pips in the next hour and a half. Again, it could potentially do that off the news. There could be a small trade setup in there. You're talking about this one coming down, approximately, what did I say it was? The 98. So yeah, right about where that line is. So right about that area, that would give us, you know, we'd be able to take it off around $50. So you'd be risking 17, being able to take it off at 50. It's not horrible, not that bad of a trade. I would have liked it if it was a little bit higher into the zone, but you know, that's one potential setup. Let me see what we have. See what we have. Getting nervous now. She's like getting closer to my ear. I'm like, she's gonna eat my ear. I really wish that was up into that zone. Oops. It's at 25. Let's see. No. Best one is that one right now. The indicative value is at 16. The short on that one, about $3 risk on that one. So that one is not a horrible play. And again, the indicative value is at 16, so this one starts really down at the, you know, again, the top of this is at 10, so it's about 6 pips out anyway. But if this thing moves whatsoever down to that line, again, you know, we'll come back and look at this one. But that could be like a simple one, just something very, very small, very, very tiny risk in this, based off that CPI number. And again, it's going to require a miss. And again, CPI is one of those ones that it doesn't miss often. It's not one of the bigger misses. But something small like that could be a potential for a pop down. Like I said, I prefer it would be in the zone, but you need that at least to come down, you know, at least 6 cents, 7 pips before that one is in a valid area. But overall, you know, going into tomorrow, like I said, I think, you know, based off of where we are, at least on this 4 hour, you can see we're starting to get very, very high on the curve. So I do think we need to start looking for potential shorts in this position. You know, there will be, you know, shorts up in this range, right? Up in this area right here. Last time price came, it came down at base sideways, it dropped, it came up and retested and then pushed much, much lower. That probably coincides with the hourly, just by a little bit. Yeah, it's sitting right above it actually. So I do believe that we will have some retracement in this one. We've seen numerous days now in a row up, right? I'm looking for some type of a pullback. Partially because, again, we have come all the way back here on the curve, right? It's pushed all the way back. We do have a daily zone sitting right above this kind of teal zone also. So one thing I'm looking for. Also, too, look at the ATR on this one. You know, where our price is right now, it's just above where normal is for this pair. So it is getting sucked back in very, very fast. Now, looking at Aussie Yen. Aussie Yen is kind of in a similar situation. This one... it kind of didn't do as much, right? The other one kind of had taken a nice pop. This one is having a little bit more of an issue, kind of going higher. 69.80 is kind of really kind of what I'm looking for sales here. In this case, it's too far to obviously take any type of a short. Those other two are a little bit aggressive, those last two binaries and the call spread that I showed you. If we get a pop from the news number on this one, that could potentially give us a short area or an area to get short in. But right now, for the most part, we don't really have anything in this one. You guys can see there's a small 30-minute, but this is just literally just going back and forth, you know, through this little zone area. And you're talking about 16 pips. So it's not even really anything that's, you know, that large that we'd be able to trade. Yeah, I think we need to wait till it gets up top on this one. So all CN is going to have some patience. If it comes up, take that short. If this was intraday, you know, if this was earlier in the morning, then yeah, I'd be willing to take a shot on it. But I'd like there to be at least, you know, more than 16 pips between the opposing zones, which is rather small. I mean, you got a 2-pip spread and it's only 16 pips. You're talking about 14 total. You know, little bit of a range there. All right, I'll go to Euro Yen. So Euro Yen on the daily is just, you know, this is something we talked about last night. We finally have punched down into that area. And we talked about this before. We're so close. So close. We needed to wait. And it went down a little bit more today, right? This position is down, I mean, from where we were last. Ow. All right. You're going to bite ears. You're going to go back in the cage. Go ahead. Back in the cage. Go ahead. I knew that was going to happen. So the little bird, I don't know if you guys know anything about birds. Little birds are nippy, but these are little birds that think they're big birds. So she's like, I'm going to pull in your ear. I'm like, nope, we're not going to do the ear pulling. Anyway, back to the actual market for where we were last night versus where we are right now. Okay. So here's where we are right now. And here's where we were last night, right here. Okay. So for the most part, it had about a 50 pip drop to the downside. It did enter this area of demand, but we weren't really worried about this area of demand as much as we were the area below it. Okay. We wanted to come a bit lower to the downside. And that's really kind of what we were looking for, right? 4 hour is the best one to see this on. There we go. That's where our zone is. We're kind of like refining it. Now, actually, let me go back. And since we're getting really close to it now, let's make sure that we're on this one. Where is it? Come on. Been a long time. Where do we draw that zone off of? It's there. There we go. There we go. Another click. And another click. All right, so this is originally drawn on the daily. So we can refine this level slightly. It looks like we can actually pull this zone probably in there. For a long, we're going to want to be a little bit lower. Kind of, you know what? This is what I'm going to do. I'm going to put this at the top, and I'm going to drop one more line in there, right in the middle. I'll change this to a yellow. Actually, here, we'll turn it to a different color, a deep pink, so we can kind of get a better view of it. All right, there we go. So that kind of dials it in a little bit more, shrinks it just a little bit, and you guys can see the line going through the middle, this kind of fuchsia line in here. This fuchsia line is really where the zone actually kicks in, where we're looking for a buy. So any short-term targets, we do want to make sure that we are taking it off around that 115.36 figure. The fuchsia line is the one that really matters down here the most, because that's where buys will definitely be coming in. The last time price was down there, that was the launching point. That zone comes in at approximately 115.09. Okay, so again, about 20 pips shorter. You know, just watch out for that one. Hold on. So still waiting for that. Even on the lower time frames, I mean, there's obviously, you know, small kind of shorts that you could take in here. I wouldn't say it's pulled back to any great areas, as you can see. Didn't get a pullback here, didn't get a pullback to here. This one kind of gave you a pullback, but this was not really the best zone. It would have been a little bit higher. This one never had a pullback, and then this one never had a pullback. So it's continuing to push down. Looking where the bottom is, we did finally break through this zone here, just barely before it turned around and kicked back up again. So I would say it is probably going to continue to move to the downside. As far as setting up a position on it, there's probably not too much on this one. I think it would be more or less kind of a guess, right? We know it's going to come down. It's just, is it going to do it today, or is it going to pull back and grab some more orders? Again, no clean, really great basing levels in here. This is the best one we have right here. All right, so not the biggest fan of this one. And again, this one, ideally, we'd love it to hit the zone around the time that London Open happens, but we got some, you know, some time before that kicks in. So pound yen. Pound yen, you can see on the 30-minute. Pound yen is down. They're getting new water, if you guys can't tell. They're going to be super, super loud right now. No, 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 no. No, no. They're like, bring my water back. Bring my water back. Here. Here. They're like children. Except I can't give them candy. There we go. All right. So, obviously, this one being down 49 pips, not really that high, right? Looking at this one on the daily, you can see the daily ATR is 103, which is technically back where it needs to be. And it's actually a little bit on the lower side because it's been so flat lately. It's come back down, and you guys can see over here on the indicator at the bottom, it's actually below where its normal is, where its average is. Its average is about 110 to 125-ish. Being at 103, it's actually on the low side. And it just goes to show this thing is not moving right now. So these are the levels we've drawn on this one, whether we come up or down. Really down here, this kind of alert down here at 132.50. That's where we're really looking for some longs, right? Last time price was here, we had a nice push off of it. Up top, kind of the same thing. The 4-hour zones you can see are a little bit higher. That's where you can see all the white and the dashes here, and there's actually that smaller level, right? The smaller level is sitting right in here, right there. Okay, and those are really the two cleanest. I mean, this is kind of aggressive, but we are sitting right in the middle. We're sitting, what, about 35 pips from that zone right now. So it's definitely within striking distance. If we can get back down there, particularly for, the London session, I do think there'll be some good longs off that. Obviously, a little bit farther down, it tends to be a little bit better. This zone down here, this one is marked down here at 132.11. That is the best one on the chart, but it's got a little bit more room to run. You're talking about 80 pips. I mean, it can do it in a day, sure. Sure, it definitely can do it in a day. But it's got to chunk through one level first before we get there, and that was a pretty clean level. So, positive number for CPI. Let's see. What did we get in that one? All right, so it did miss. So let's see what type of a bounce that one took. I don't need to go there. Hold on. Nope. Go back. Broadcast. Come on. There we go. Let's go across. All right. All right, so we did punch through a little higher than that zone. Again, that's what we expected. But we didn't get a punch all the way up to that level, which is interesting. Aussie yen, there we go. We did punch back up into that zone. See, it was already starting to pull away. Drop down to the 5-minute candles. You guys can see, look at that. It was starting to collapse before that news release came out. Kind of jumping ahead on that one. And again, typically a telltale sign it's gonna pop, right? I was hoping for the other direction. We didn't get the other direction, but it did come down to what, 68.41. So I mean, it had it's only about a 5-6 pip drop to the drop down. So you're seeing a little bit of problems with this one. It'll probably do okay. 0.5 is actually a nice little hit for that one. That one typically comes in, that one typically is right on or maybe 1 point off. So being 0.2 off is not bad. It's 0.3 on the regular CPI. The trim mean is off by 2. So, good figure for Australia. It just shows that Australia is come through onto the other side. Let's see if we can get up to those levels. No, that's the big question is, can we get up into the higher levels? There wasn't enough to spike, but this could be an overnight and then a reversal tomorrow morning. So that's pretty interesting. And then Aussie, same thing. This one is pushing up. It's like, come on, hit that level. It's like, hit that level. I mean, it stinks that they're just so close. It's like, just go a little bit more. Come on, you can do it. Just go a little bit more. And we'll see how those turn out. Okay. All right, let's go back to, so pound dollar, like I said, pound dollar for me, we still got to get a little bit lower in there. There's not really a great entry level for this one, or, this kind of area right here is pretty much junk. There's not a whole lot to get in. So don't love it as much. And as I said, you can see that the ATR is really shrinking down at 108. Okay. NITX spreads went from like 50 cents to $7. Yeah, they will, because just the volatility associated with it, it'll get kind of crazy to like go bing, bing, right? Rather fast on that one. And again, that's something you got to watch. That's why we didn't put it on. All right, so pound dollar. So pound dollar, I'm still holding firm on my 4-hour zones, top and bottom. Pound dollar is up about 52. So on the daily on this one, you can also see that the ATR is down to 113. So the pound dollar has a higher daily ATR than the pound yen. That tells you, really what's going on over there. But if you bring this back down and look at where it is, it's just a little bit above where the average is. By a little bit, right? By a little bit. I mean, this one is typically about 90 to 105-ish. The pound yen is sitting right above that, but that's actually a bit lower now. So, it had a bit more movement. Obviously, the dollar is a little bit more volatile right now than the yen. Top and bottom, I think, are really what matters the most. I went over the touch brackets for this one this morning, talking about how on the way down, it's going to bust some brackets and we'll get some better setups. And then we had the two touch brackets up top that gave us a pretty good placement inside of this zone. I do like this zone. Again, you can see it got pushed to more or less its brink before from this basing level, and then turned. And again, the indicator is painting the backside of it. So, you can combine those two with the touch brackets. Obviously, we have the limited risk already involved in there. But I think that's kind of what's going to be best for this. I mean, dropping down to the lower time frames, like on the 30-minute, you guys can see here, this is what we're looking at. We didn't actually make it all the way back down. Again, you wouldn't have taken a buy off that zone. It's just, that's not what that zone would have been for as far as buys go. But this is not a bad zone to short off of up top if you're looking for something smaller. Now, you guys can see the tops and bottoms over here, and it's really just been kind of basing sideways for the most part. It's ground up. I mean, we weren't really moving here. We got one little pop, and then it grind sideways here, and then up and basically back down. So, 24 hours, it's moved about 50 pips, but, hasn't really moved that much. Hasn't really moved. So, like I said, this zone up here, if you guys are interested in taking a short off that zone, that's actually not a bad one. If that actually coincides with the London Open, that wouldn't be bad up here at 124.95, and look for a flip and reversal to the downside. If this was if it was currently right now 8:30 in the morning, 9 o'clock in the morning, and we're getting close to that 10:30 flip, I would definitely be all over this position. If it hasn't for some reason hit that zone, that would definitely be a flipping zone possibility for tomorrow morning as well. As far as today, where flips came in, you guys can see that really we had this 8:30 kind of hit right here, 9 o'clock, and then price came back down by 12 and it just kind of stopped. The flip on this one did not come till much, much later in the day. And this one actually started the move before the consumer confidence number. The consumer confidence number came in, let me make sure we're correct here on the time, right? Yeah, consumer confidence came in here. Actually, this candle right here. that long red one. So it had already turned, it already formed, and it already bounced to the downside. This one was kind of one of those front runners as far as the weakness goes. And the market kind of priced it in early. This was about a 2-hour, mover beforehand. And then it just flatlined. You can see the ATR just really shrunk down to nothing after that point. So keep that on your radar as something on the shorter term frame, on the shorter time frame. And then again, top to bottom, you guys can see these are close, so I had to kind of stagger them. And these two fit on the bottom. There are touch brackets, top and bottom. So I'm hoping tomorrow that we can continue to rally up, show a little bit of pound strength, dollar weakness, get up into this range, and then obviously take those for potential shorts. What I'm looking for those shorts, and again, hopefully this does this in the overnight, is we have this advanced GDP number, and it's supposed to be, now they've adjusted it. It was supposed to be 3.9. Now it's up to -4. Okay, so they're saying it's going to be worse. And you can see they're typically not right on this one anyway. In January was the last time they were really, they were right. They're typically not right. They already know it's going to be bad, right? They've already changed the forecast once from even this morning, from 12 hours ago or 9 hours ago. We know it's already been changed. So that's kind of a big kind of flipping turning point at 8:30. And then obviously FOMC statement tomorrow. The press conference is where the magic, typically the weird questions come from. But this is going to kind of start off the morning. And pending home sales, pending home sales are talking about being down 13.3%. Yeah, it's funny. My the boy's mom, my ex-wife, she's trying to sell her place. And she's like, yeah, the real estate agent said it's a great time in the market. I'm like, no, but okay. So I'll have to send this to her, be like, hey, tell your real estate agent, pending home sales month is down 13.3%. Ask them where that good market is. But yeah, so FOMC and then advanced GDP. So keep both these levels on your radar, top and bottom. Once the London session takes over, we'll see if we can get up or down, and then look for touch brackets in both those locations. Okay. I think there's some good setups in this one, and those touch brackets. Let's see. We're a little bit ahead on time, so I might as well go over here and do it. Oops, not those. Touch brackets, forex, pound. Okay. All right. There we go. So you can see where current price is right now. The indicative is at 124.72. You can see that zone, that the top zone is the proximal side is 25.80, right? So again, this one right here, TB8 and TB1 will both be taken out, okay? TB5, it goes to 26.17, so it's about halfway through the zone, and TB6 is a little bit on the other range. So when these two get taken out, we will have new kind of prints in there, and that may actually give us a little bit better of an option between these two. Now, is the 26.17 horrible? No, it's not bad. It's about halfway through, so that one would give you about half the risk of that zone. The other one would actually go a little bit past. So of the pick in here, I would have to say that TB5 is my favorite for the short. But we'll have to see what the two reprints are of TB1 and TB8. As the price goes higher and gets up to that range, they get taken out. Actually, yeah. 25.67 will get knocked out right beforehand. That one we may not get a good print. But this one right here, the 25.15, that's the print that I'm pretty curious to see where that one comes in, if it comes inside of that range and gives us, something that's a bit more acceptable. Okay. Bottom side, obviously those come in at 21.83. You can see that none of these are even remotely close. So as price comes down, these will be broken. Most likely those breaks, with price being currently at, price is currently at 24.72. You can see that this one, obviously, we're going to break this top one first. It's just going to literally chunk right down the line. So most likely, actually, this one may break twice, maybe. Yeah, this top one may break twice, and this one may be. It'll be close. Actually, this TB5, if that breaks to the downside, that could be the bottom side target. So in reality, either one of these two is probably going to be good when we get to the top or bottom level. But typically, the TB5 right now for the top side is the short that I'm looking for tomorrow, if we can get up there before that advanced GDP number. Okay. Look at Euro pound. So Euro pound is down 21 pips, not really a whole lot. And you can see there's been a spike now in the last hour. On the daily, you can see we are sitting inside of an area of demand. It has run into that zone a few times, and you can see here on the 4 hour, it doesn't even draw it. But look how much time it's spent here. So, I mean, the original zone was drawn back to this level here. Right there. And we spent all this time here. We spent all this time here. We touched it again, went through and pushed it again. So I don't really put a whole lot of credence in this level. I do think this level will get broken. And big question is, will we get a nice enough pop to the downside that, we have long possibilities out of this. Now, the pound has had a lot of strength and the euro has been more or less the weaker of the two. We haven't heard a lot of kind of really one way or the other out of the pound. I mean, like I said, we mentioned Brexit last week and hard exits, and they were cool with that. And then we haven't heard anything since that time. Going into on the 30th, right? This is where a lot of the European data comes in, right? The flash PMI, the refinancing rate, obviously they're not dropping it down. The monetary policy statement. So that all comes in on Thursday. I think that I don't think this will have a problem. I mean, you can see today on the 4-hour, it really didn't do a whole lot. It may take 2 days to get into these levels, and that could be an area where we want to start, looking for things. The beginning of that level, actually, I won't do the beginning. I'll kind of do down here where there's the overlap, is the 86.29 area. Really, somewhere in this range, there are going to be some buyers that step into this market. And the question is, how do we snag it and kind of really get some type of a long? So on the hourly, you can see for the most part, it's not basing. Or it's basing more or less here. We've had a little bit of a push down, but it was really just a retrace of this spike. So whenever you're able to get this much price action, right, inside of here, I'll change this to yellow. Look at all that price action, how this area here, it fell into it. It popped a little bit out and came back in, went across, popped again, rallied back in, held it. Tried to escape, sucked it back in, held it. Then it punched through, then sucked it back again, and then held it again, and now it's kind of pushing at the bottom. So this area has been somewhat of a magnet. We need to clear through that magnet. That's why I think if we can push all the way down to the 86.33, that will give us enough movement to the downside to finally clear through really this pink junk here, all this pink junk. And again, I deleted it. I apologize for that, but it's going to be down here in this level, down at the 86.26-ish range. Besides that, I mean, even looking on the lower time frames, like on the 30-minute here, you can see that really not a whole lot of excitement. Again, this bottom zone is just the one that we just drew, right? But here's your 30-minute. I mean, where's a really clean movement? I mean, this is not really clean. It kind of just grind down and then popped and then came back up again. And then, yeah, not a whole lot. I mean, this zone up here is probably the only one, right, in that range. And that level is sitting right there. Okay, so that could be a potential level for tomorrow. Unfortunately, that is about 40 pips away. So, I mean, it'd have to be a pretty strict or pretty powerful kind of just sudden reversal to kind of chunk through all this junk in here. But for me, this one has just lost a lot of momentum. I mean, this is multiple days in a row. The ATR on this one is really shrunk. It's back down to 55 pips. You guys can see, let me throw ATR back on. Let's do the dark blue so it stays consistent, and then make it the big piece right there. You guys can see that where ATR is right now. See where I'm located right now? Look to the left. Here, I'll put a line there. Here's current ATR. Look at all this space above the top. If I had to pick an average, I'd say that the average is probably sitting up in this range. We are also below the average because both the euro and the pound have kind of sucked out. There's just no movement, right? They're kind of at rock bottom. Makes it a little bit more difficult to trade. Okay. Going to euro dollar. So euro dollar is bouncing off of this zone that we talked about earlier today. One of the things I talked about this level was it's bouncing off of it, but I did not like it for the fact that we were basing right above for a while and then we popped into it. I thought it would have a very difficult time coming through. It made a liar out of me. It did go up and is pulling from this smaller zone, and I think it's a 15-minute. Yeah, it's a 15-minute zone that it's pulling out of right now. I didn't think it was actually going to get out of that zone from the very beginning. And then you can see it didn't actually even come down on the 15-minute. I don't think the 30 it did either. Yeah, the 30 it didn't make it either. So it got close. From the short, that would have been our target area to here, and I was looking for a break and taking over this downside. Now, we are going to need some dollar strength in this one to come through. With a really bad number tomorrow, we may or may not get that kind of push. Like I said, the market is preparing for it now. When they adjust that up, that would be this weakness. If the market is overestimating what it is, and if it actually doesn't come in that bad, that would give us the strength to go to the downside and kind of punch through. So I'm still kind of holding on to this one. And, again, I want to see a clean break. I want to see a Harry Potter. I want it to come through that range, and I want it to punch back down to this lower level. So, again, trade hasn't triggered yet. It's still sitting there. I'm still looking for a break, and maybe we get that tomorrow. Maybe we don't. 4-hour wise, again, if it just continues to drive higher, there's a few areas up top that we should point out. One being there's a level right here that we actually had a gap off of. It was a nice base. Price shot down, came up, based, and then continued to push lower. A little bit of a zone here, and again, I drew a zone from back over here, and obviously we have a new one printed. But this zone as well is actually not horrible. This one's a little small. I like this one a little bit better, and then we have up top. So there's a couple zones higher. We really need this one to start trending as well. I mean, here's the 4-hour. There really hasn't been much trend. I mean, we trended a little bit here. We turned on a kind of a lesser zone and then pop back up, and we're kind of stuck. This is the same thing we did on the last one. Look at this, right? Bottom, almost to the top, bottom, top, top, bottom, top, broke through, touched it again, came back up, bottom, top, bottom. So it's kind of been a range that it's been kind of just stuck in, more or less sideways. And this is why I do like the rectangles as a way of analysis. You can kind of say, hey, listen, are we trending? I mean, you take this triangle anywhere else, right? And go, oh, look at right here. You can see that it just continued. Oh, no, it doesn't work. No, it doesn't work. Oh, there we go. Look, no, it didn't work. It came through. Where when you go like this and you can get this many candles in the box, it shows you how little movement we've actually had. Okay. A bunch of stuff's going to delete on. All right, here's your daily ATR as well. Now, this one is not quite as bad, right? Here's where the current ATR is, right here. And you can see that the average of this one would probably be back down in this area, which is about the 55-60 range. So it's at 77. It's still just a tad high, but it's slowing rather quickly. You can see this one is starting to level out here at the bottom as well. So there'll be some opportunity in this one. This is definitely one of those ones that we want to look at tomorrow morning. Drop it down to 30-minute levels and see what's formed in the overnight. Now, for a 30-minute level, if we can push back down tonight and we can get down to this level for that news tomorrow, then yes, that is tradable. News-wise, I'd be looking for probably the top one, but I would take this bottom one as well. Let me see on the 15-minute. Yeah, I'd probably take this one if we can get price close. Right, so let's see right now. This is a 15. Let's drop and see what do the touch brackets look like for this one tomorrow morning. Let me see here. Let me throw some numbers out here. That one's up in that range. That one's going to be down in that range. Let's see, what do we got here? Top side. Looks like there's one over here that's 108.72. So let's see. The distal side of this one is 108.58. Although, look at this right here. 69. That's actually the one I wanted up there. Yeah, there we go. 87. Yeah, there we go. Let's see. 82. Let's see. Ooh, it may just be on the outside. It's just a little bit long. Yeah, it's just a little bit high. This would get stopped out right before the zone at 108.72. The zone starts at 102.82. Unfortunately, that would be a better one for here. So again, it's a 15-minute. We typically like the 30 minutes on this one. If tomorrow price has rallied into this yellow zone right here, you do have a touch bracket that, again, you can keep the risk rather low into it. Right here, this 108.72. Otherwise, we're going to have some breaks going through to the top side. That'll be the first one, and then we'll have a reprint. That reprint will be closer up here to where we'd like it. The 109.22 is, yeah, it's definitely up here. It's more of a 30-minute thing. Yeah, it's way up here. So I don't know. We'll see if price can move that much before that news tomorrow. That would put us in this other zone as well. That would put us in this hourly, which actually would shrink. It's actually not the best. It's actually probably put it there. Okay. So we'll see where we are tomorrow morning. If we have not moved that much, again, because of this pullback and we're sitting in one of these two zones, we do have one option, kind of in the smaller, the smaller level of basing. If we do move this entire way back up again, which is about 70 pips, and it can happen in the European session. I mean, 70 pips is not a lot for the European session. If we do get legs that high, again, there is a shorting touch bracket up top. Lower level, you guys know where this one is at. It stops out at 108.12. That would be the bottom side of it. Right now, there's nothing even, everything is much lower than that, so it's a little bit more risk. But you do have this 107.40 down here at the bottom, and there is actually a bracket down here, this TB2. So if we're able to drive down, there is also one here. Unfortunately, these touch brackets are rather wide because it's still based off of the craziness. and we are on some lower time frames. So there is some options in this one. I think the top side is the probably more reliable one. Any type of a push up for a reversal, or if we can get there before news would be even better. So if we're not in either of those two, then obviously flip across, look at those 2-hour binaries. The premium will be up a little bit higher, but we can't even look at them now because there's just, obviously it's, go to the smaller time frames, go for the burst, go for the fast move, get the small strikes and play it that way. All right. Dollar CAD. So dollar CAD's pushed back into this zone. I don't see it holding from this zone. Nice pop up. I think it's going to come through. I think we will go a bit lower. I talked about if price was able to make it up to this 140 figure, that there may be some, some shorts there. It didn't even make it. It ended up basing and then obviously, retracing all the way back to the downside. So didn't make it, got front run. I would probably wait until we get down at least to this level here. This is down here at 138.85. It's the first time, or it's really the last time we had any type of movement. Of these two demand zones, I do like this one better. This is where price gapped into back in March and set us off on this explosion, right? We are now starting to get back within range. It's only about 160 pips away. The daily ATR on this one is 127, so we are about 2 days away. I want to see, again, with oil tomorrow, the oil inventory report is going to affect this, okay? If it is not as bad and it looks like oil is going to rally a bit, this will continue to push down. The question is, does it have the juice to make it through this area? If we do, I'm hoping that we are down here by Friday to get some type of a long position. Now, lower time frame, as I said, we had a zone up top. It didn't make it. Even if you've taken the entire zone, you just basically got front run. So the analysis was right. We were looking for a short. It left without us. It just went a bit lower, and we weren't able to get an entry into it. And that's going to happen. It's whatever. It happens. You can't be upset about it. It's pushing through. Okay. I would still say short this one, but no trade set up for the overnight. Looking at the yen. So the yen, it looks very, very similar, right? Came back up. We had a zone we were looking to sell. Didn't make it there. Based, and then just boom, collapsed through. Now it is going lower. On the daily, you can see that it's kind of there's a lot of big candles back over here. It makes the analysis a little bit harder. Here's your 4 hour. You can see we were basing basically forever and then started the pull. I can't even make it more exciting. But looking to the left, there's a zone here. And again, the bottom of the wicks are ascending, which is hard. Same with this down here. So it's kind of one of those trades that it's like, where's the best level? Now let me take that off. And you can see this is where current price is, this little gray line. And this is what we're looking at. No clear big launches until we get down to this level, right? This is just all kind of just back and forth, slow chatter, slow grind higher. And that tends to be an issue finding positions. You guys can see if I suck it in here, we got quite a ways before we are down there. Okay, so the way to play this one in my eyes is again, it's going to be a morning type position thing. See if we can get back into an area. See if it's pulling back a bit. You can see this one, it just did nothing, right? Basically, the move in this one happened at, what, 6:30? So from 6:30 to now is where all the movement came in. Here's what it did during the day, right? Here is the market open. Here at 6:30, right here is at 11 o'clock. So we had movement from 9 to 11, and then it did nothing. And then popped. So what I would do is I look at this in the morning, as I mentioned before. 8:30 tomorrow morning is the advanced GDP number. Let's see where we're at. Let's see what the strikes print off of. Just to get kind of a visual view of it, though, let's check to see where the touch brackets on this one are, top and bottom wise. So it looks like if current price is sitting at 106.56 right in this area. Actually, let me pull this over real quick so I can pull some things down real fast. So it looks like we have one touch bracket coming in at 107.05. Nope, just happens to be right at that zone. We have another touch bracket coming in at 107.55, which is right there, which again, I do like that one. I mentioned that one earlier. And then we have a 108.05 sitting up in this range. Okay, so looks like where this white zone is, hold on. Looks like, where is it? Looks like that zone right there is one touch bracket area, followed by another one up here. Okay, so here, here, and here are three touch brackets. Again, that would take a lot in the morning for us to get up to there. Now, bottom side, let's see bottom side where they're at. We're going to actually flip these to this side so it goes backwards. All right, so it looks like 106.05, which is right here. 106.05 is right there. Okay. And then 105.55. That one's going to be pretty far down. 105.55 is here. And then we have 105.05 here. And then we have 104.55. 104.55. All right, let's go to an hourly. There we go. So that gives us kind of an idea. So although this 104 is quite a distance away, that's something we should keep on our radar. And I don't know, that's quite a bit of movement, right? You're talking about 200 pips total. The daily on this one is only 67. So we're talking about late and in the weekend. But it's nice to kind of paint these things out of where the touch brackets are going to be. Maybe I'll start doing that in the analysis on Sundays. Starting to talk about where some of the touch bracket levels have printed and kind of match them up to zones. Trying to see if we had anything in there, but there's just not. We're not that close. Like I said, the closest ones we're kind of smack in the middle right now. Like I said, being in the very, very middle of the touch bracket provides the most risk to us. We like top or bottom. We don't like in the middle. It's just one of those things I'm not a big fan of. So, I'm praying for the rally. I want a big spike. If we can get a spike into the 107.50 range, that's the one I'm looking for right there. But at this point, that's the best setup for dollar yen right now. So hopefully we get some movement. Today was it was down 72 today, so excuse me. We can get up into this range. So it can get down to this touch bracket. We may actually bust one bracket, but there's not really the best of zones to bounce that off of. Yeah, it's not the best level to be taking longs off of, unfortunately. Okay. Doesn't always match up. All right, dollar Swiss. So dollar Swiss. This is what we got with dollar Swiss. Dollar Swissy. All right. We basically have a top and bottom bracket. Now, this thing is bounced off this bottom level, which, again, you guys can see I've spent a lot of time here. I said set an alert for this one to see kind of what would make sense for us. The alert got triggered. It did go a little bit lower, and it actually is kind of sitting on the alert area right now as far as longs go. Ideally, this makes a lot of sense being at this level before news. In the overnight, it's kind of a crapshoot. It's not a very big risk zone. The risk on this one is only about 9 pips, so it's not very big. Pulling the risk to reward tool up, you can see the 1 to 3 is actually not in a horrible place. It does make sense for price to go there. It is a price where, a level where price will probably turn, but it also matches our risk to reward profile. So it's right there. We've seen price come off of it here. We've seen it pierce just as much as it did before and push itself off again. I wouldn't say that this pair, even like on the hourly, I wouldn't say that it's really more or less range bound, kind of back in here, right? We're kind of in a little bit of a downtrend, but only because of the last couple hours. For the most part, we had this kind of basing, one pop, one return, and then it just has kind of stayed in the same area. So wouldn't say it's necessarily trending, but we do have a little 30-minute setup on this one that is getting ready to come into a zone here soon. So that's something to keep on your radar in the overnight. I'd like the U.S. kind of trader to force that one, but it doesn't mean that the European trader can't be the one that forces that one as well, or the Swiss trader coming into the markets. Okay, now let's switch over to the indices. All right, the indices. All right, mind taking a look at Apple for me. Apple, yeah, Mayo. If you're still around at the end, I probably got about 15 minutes probably more of analysis. I can pull up an Apple chart and show you what I think if you're around at the end. All right. All right. So on the daily, NQ is hitting a zone. We were pulling back earlier today, and you saw we got a pretty nice pullback before. It bounced right off of a 4-hour zone. Okay. Came all the way down, and about 12 hours ago, really at the reversal time, it hit and then ended up moving. So today's consumer confidence number did give this a bit of a boost. All right. As you guys can see, we were sitting down in that zone. There was a touch bracket just right below it. For me, again, I like the tops and bottom of this one. The way that the top of this one was formed, where it came up, kind of did this little red, green, and then just collapsed. I do like this top area. So I'm actually kind of hoping that we get this push in the overnight and put ourselves up here before the advanced GDP number tomorrow. I would be all over that. And whoops, I lost it again. Where did I do it? Oh, it's over here. Here's why. So again, this is one of those ones you got to make sure you have a limited risk on there. But if we go into the tech, we can see that that is up at the 89.32 range. This guy right here, I'm sorry, right here, this one is a little bit too shy. But on the way up, this guy's going to get broken. And actually, we're at 88.30. This one's only got about 20 points before it breaks, and this one's got about 50. So if we can rally up in the overnight, which is definitely possible, we will break both of these touch brackets, and we will print one closer to this area, one that makes a little bit more sense. The 89.40, this 89.48, you can see that that one is not horrible. 89, basically 55 is the backside. So that gives a little bit, and that may end up, again, I'm not a master at where they print the new ones yet. I just haven't traded them enough to be like, oh, it's going to break, and there's the new print, and there's the new print. I'm not that good with them yet. I do think that we will get one that maybe make a little bit more sense, but worst case scenario, you take this one, right? The 89.49. It's just, that will put you in the middle of the zone if we can get close to there. Okay. Ideally, that would be the best one for a short tomorrow morning. This TB43. Okay. If we push down in the overnight, again, bottom side with, down here at 86, you'll see that none of these are, 86.46, nothing is close. Every single one of these will break on the way down to be able to get to this 86 number. So unlike, what we've seen in some of the other touch brackets, we're close to the ceilings for these, for this, if we pop. But, right now we're kind of still smack in the middle, right? You can see if the top is there, the bottom is what, 87? Yeah, bottom is sitting right over in here. So we're closer to the bottom at this point. We want to be closer to the top in this individual touch bracket. But again, NQ is a nice little setup if we're able to pop up in that range. Anywhere around the 89.45 or 89.40-ish range up to the 89.55 range is where we'd be looking. And again, this touch bracket pops at 89.49. Okay. Looking at S&P. S&P has a similar level. Again, on the daily, you can see it has not filled that gap yet. On the 4-hour, not as impressive. Again, there's a gap level sitting right above right here. And again, that's a 4-hour level. We're close. We're just not quite there yet. That level comes in at approximately, 29.44 is where that kicks in. And again, on the hourly, you can see we have a small zone, and there is actually a zone that's printed here, which is the same gap zone, right? You guys can see it draws it off the very, very top. So you can either use the 4-hour gap or the top one. Obviously, the one that's going to be painted purple here is probably a little bit nicer in this case. But you can see this one will start and kick in around that 29.65 range. So again, going back in, looking at the touch brackets to kind of keep that thing close. Okay. Sorry. I was like, wait a second, wrong one. Let's see. We got a 29.65 is the top range of that one. So all these will be broken before we can end up hitting it. There is the smaller zone down here. And again, I don't know how much it's going to move in the overnight, but if we move back up into this range, which is pretty close, I mean, it's not going to be that difficult. That one is obviously, there's this 29.17, which is pretty close. Okay. If you're looking to take more of a shorter term position. I'm kind of hoping that all these pairs rally. I'm hoping all the indices rally in the overnight. I just don't know if we're going to get as far as they need to go. But tomorrow morning, if we are sitting in the zone again, this 29.17 is going to be the right one. The 29.27 puts us here. It's just on the other side. Maybe 29.27. I'm still holding for a break on this one as well. I think if we can come through that again, we've pushed this zone all the way to the brink. I thought we'd break this time, but it went literally to the very, very end, and then that's what its turning was off of. I think if we can get a break below this, there'd be a nice little trade in here. But like I said, so much of this is going to depend on where we are tomorrow before news. Okay, let's go across to the Dow. So the Dow, the Dow is the Dow, right? We'll refresh those levels. This one got close, kind of the same thing. Here's your 1 hour. You kind of bracketed in top to bottom. This bottom was formed today at about 10 o'clock in the morning. When we did an ADX broadcast this morning, we were already sitting over here. We had already pulled off that zone, okay? We did push back down and then continue to drive a bit higher. I'd say this one is boxed in pretty nicely. Depending on how close we are to the top, it's probably a similar situation. We are probably looking for some type of a short. And again, it's just based off of the the technicals in this one, of where we're at. Looking at this one again, that zone starts around the 24,446. It's kind of stuck in between in here. The top side of that bracket would be 24,547, which is, fortunately, it's a bit high for this one. So there's not, unfortunately, this one, because the brackets are spaced and the numbers are much, much bigger, may not necessarily be the ideal situation. So we got to see where we are. This one may be a call spread, or maybe even a binary tomorrow, if we can rally up. Now, this one I think is the easiest chance of rallying up in the overnight to get us higher. Now, you may say, wait a second, we're expecting bad numbers. Why would this rally? Very simply, why would it rally? Well, think about it. If you're going to sell something and you want to short, do you want to get more money for what you sell or less money? Right? You want to get more money. So what will happen is the market will raise it higher to bring it back down again. So they could be shorting it at the higher amounts. Okay. That's why it's kind of going up. And that's why we're kind of cheering, saying, go team, go team. Go a bit higher. All right. Gold. All right. So gold was a little bit nuts today, right? Gold was up. It was back down again. And they came back up again to the same exact level. So we had drawn a touch bracket on this one. We had a touch bracket in that range. I think we drew, I don't know if we drew on the hourly or daily or whatever it was, but we had a touch bracket on this one. I forget where the zone was. Unfortunately, when I hit refresh, it wiped it out. But we had a touch bracket sitting in this area, and I believe it was like a 91 strike. It was a 61.91 strike, and this one came down to 61.91 and a half. So it was based off of my hourly. No, I'm not gonna be able to find it. Was it off of that zone? Oh, don't jump on me. That one. We had a zone painted over here. I had it marked off last night. It may have been that. Let me see here. I think that's where we had it. Nope, it would have been lower than that one. I'm not going to find it now because I had it drawn. I had it drawn like almost perfect. But basically, we stayed in it by about 30 cents. And the bounce off of it was pretty nice. Very, very clean. Actually, you know what? I know where it is. I take pictures of all these things just so we have them. Let me see. Let me pull it out here. It was in futures. No, not that one. No, I'm not going to be able to find it. It figures. It figures. Oh, I know where it is. I have it in the other area. Let's pull it over here. Let's pull pictures. Let's go to gold. This was actually a pretty good setup from last night, so that's why I wanted to show this one again. There we go. So that was the setup we had right last night off of gold. And you can see the zone was actually formed, and actually I did draw it right. That was the correct bottom that I had drawn right there. Anyway, this is where the area was, and it was a 1691 touch bracket. Now, did it go past the zone? Yes. The low went down to 1691. The touch bracket was 1690 flat. 1691. It went to 1691.35 or whatever it is. So it did manage to stay in there on the charts. And Nitix is always a little bit higher. So as you can see, we got the nice bounce out of this one. So remember, a lot of the times in the zones, we're getting a little bit of extra leeway. And the reason I'm bringing this up is because remember, when you're placing your touch brackets, make sure that you are protected on both sides. The problem with having a touch bracket that's sitting kind of right here in the middle is you're running into problems, or, you're running into problems where if it goes just a little bit farther, it's going to take you out of the touch bracket and then continue to push. This is the one thing I don't like about the touch brackets. Where if it's a call spread, I don't care if it comes all the way down here, because it closed up top, you still made your money on the trade. It doesn't matter. So that is the one problem with the touch brackets that I don't necessarily like, but I understand why they're there. Okay, but there was a great trade setup. So now going into tomorrow, okay, the question is, will the GDP numbers affect this? And the answer is yes, because if the GDP numbers are horrible, there is no risk of them raising rates whatsoever, because it's just the market. It just basically says that we've had no production whatsoever. Market's not moving. There's nothing to kind of play into this one. So looking at some of the gold, and again, I don't trade gold often. Again, I don't really trade touch brackets too much, but I'm getting more and more into them. I'm actually really starting to enjoy them based off of what I like about them is that they are typically much closer to price than the call spreads are, and we have the duration in them. If they come out with weekly call spreads, I don't know that I'll trade Dutch brackets as much because I don't like that stop loss. But I do love the fact that they are all because they reprint, they stay more in touch with what's going on currently. So that's kind of like, I think, a big advantage. So with price right now, currently at 1726, okay, it shows us again, we still have this upper zone here, this 1730, and we do have a touch bracket sitting at 1731. So it's close, right? The other side of that one is up here at 1736. So it's a bit close for me. I don't know that that one will make the most sense just because that's how they're spaced right now. It's a bit too far away. The bottom side was great when it was down here at the 16, and actually the touch bracket's still there. There's the 1691. So you can see right now at 1741, it's actually not far from being stopped out back on the top side, right? So it survived. Actually, I guess it would have broke here and then reprinted itself at the same exact level. But that was the original trade. You can see the price actually pushed all the way up. Came up to 16 or 1714. So nice trade. I think that's what we're looking for again tomorrow. But again, smaller time frame. We need to make sure that we are kind of in touch with what's happening. So tomorrow morning would be the time to watch this. Gold will move in the overnight. As you can see, there's a lot of zones on the 30-minute that are stacked above it, right? We got the one right here, and again, it's hitting, and it looks like, it's made one attempt, and it looks like after it pulled back down, it is making another push through. So it looks like it wants to break that level. Obviously, the one above has not been retested. This one is actually a retest of this level sitting right here, okay? So that may be a zone that's not horrible to go off of it, as well as this one is tested. So there's a couple different places up here that we could, potentially get short positions in. Let's see, are any of these going to break? Probably not. 31 will break, but barely. It'll break all the way up here. So yeah, it looks like tomorrow, best way to play this one is probably going to be like a small 2-hour binary. I was really excited after the success today with the touch bracket on this one. I was like, oh God, we can do it again. But it looks like the pricing of this one is going to be funky with all the ones in here. So, oh well, I thought we were close. We were close. And again, you guys can see this one right here. This one that just got printed. This one, the bottom of this one is at 1711.0. And well, it's giving us a much higher indicative value. But you can see we're pretty close. Okay. All right. That's gold. Silver. Whoops. Right here in silver. Again, sitting up in an area of sellers. I do think this one will be negative tomorrow. I've been kind of watching this one more. This one, again, these zones have been holding pretty well. You can see silver has been very, very, I don't know, streaky for less than a better word. I mean, look at this. All the way up, barely touched, came back down again. Did an okay retrace, touched again, bam, got slammed down. It's come all the way back up, and again, multiple times, whenever this reaches levels, here you go, got pushed down. And again, it makes one attempt, tries to go higher, and then gets slammed, right? Over here, it did the same thing. Came up, made an attempt, slammed. Pushed all the way up, made an attempt, went just higher, slammed again. So we are pushing up again. I'm looking for that same kind of pattern where it starts to pull away a little bit. It kind of uses all its sellers. Now, I do like this zone up here, this 1528. I do think this zone is pretty nice. I like the fact that price hasn't really touched it. It's skirted along the bottom. I had this on my radar for a short. If we can get up here, I will probably take a short off this one. And like I said, I don't trade silver too often, but have been following it a lot more, and I do like that zone. I also like the bottom side, the way that this one was formed. So for me right now, currently, I have alerts set in for top side and bottom side, looking for sells here and buys back down in this 1495 to 98 area. Is where I have my alert set. So I'm kind of holding off for those two. And if we can get to either of those, again, sell up top for me and buy on the bottom side. Now, oil. Obviously, oil, we can't use the ECN pricing. It's a little bit funky. Here's the chart that we drew last night. And you can see bounce up. We took a nice little bounce off that bottom side. So what I've been talking about was I wanted to be up here or down here for the oil inventory report. We're kind of smack in the middle right now. I want to see what it does in the overnight. These are the two zones that we marked off. And remember, this top zone, this is definitely a little bit looser of a zone. It did push through the top, then through the bottom, then push through the top, and then the bottom, then push through the top. And then we closed there Friday. And then this week, it's been straight down. It came to the opposing level that we'd marked off. And now we're rallying back out of that level. So there is this little tiny hiccup right here that you guys do need to watch out for right there. Let's change that to a different color. Ooh, we can't really see that one. That's even uglier. Anyway, you guys can see it up there. I don't know why it's not darker, but man, I knew that was darker before. I don't know. Oh, here it is, the opacity. There we go. All right. We do have a little bit of a zone there, but we are sitting smack in the middle of the range. Hopefully we can rally past that in the overnight, but I do like the top and bottom. Remember, the oil inventory report does not come out till 10:30. Give us a little bit extra time, right? We have those morning traders getting in there, moving the markets, and maybe that will drive us higher or lower. This top side is sitting there approximately at 1650. Bottom side is sitting there down at 1124. So we'll see. Let's see. Have they updated the oil numbers? James, if you're out there, let me know what the oil numbers have been, if they've been released yet. It looks like, well, it's Thursday, Wednesday. Yep. Okay, they've been printed over here. So it looks like the crude oil inventory numbers right now are 11.2 is what they're saying. Now, the last couple of weeks, you can see that we've been much, much higher. They've been flirting. Last week, they were at, 15.7, and we came in even higher again. This week, they're cutting back down to 11.2. This may be the last week where we have really huge numbers with things opening back up again. But, again, they have kind of pulled back the forecast a little bit to see, what that number looks like. Now, if this comes in at 9 million barrels, does that mean that, hey, oil's going back up to 50? I don't think so, right? I mean, having 9 million, 9 million barrels of surplus is still a lot of surplus, right? I mean, we're not talking about 1.6, right? I mean, this can move the market when it's like, oh God, 1.6. 9 million is still a lot, right? And again, people are like, oh my God, it was supposed to be 11 and it's 9. We're bleeding oil left and right. No, we still got a lot of oil. So, we'll see what what type of response that we have off of that. But those are the two levels that we drew. Last night you guys saw these two levels. Again, this is where we were Friday. We talked about this being a low. This went in early last week, back on the 22nd. So, last Tuesday or last Wednesday. Yeah, we'll see. I'm going to see what it does in the overnight. All right. That's the best I got with that one. All right. Mayo, let me know if you're still here. If you are still here, Mayo, I will pull Apple down and I will do, let's see. I will pull it up just for you. More about Apple. Yep, he's here. All right, cool. All right, so let's see. Let me pull. Let's see. We'll pull this in. I think TradingView will give me the best kind of chart that we can look at it. Let's do the full featured chart. See what we got here. All right. Apple. All right, so let's take a look at this one on the daily, see where we're at, right? Whew, look at all these gaps. I'm looking at this, I'm like, oh my God, what is wrong with this chart? But this is called stocks. All right, so for me, looking where we are, at least on a daily level right now, you can see that the last time price pulled up into this range, we had some gaps and it pushed it back to the downside. So first off, that's, it's showing me that we're not at all-time highs. We're seeing that there's a little bit of a little bit of hiccups in here. So let's drop it down to lower time frames and kind of see what we can see. It doesn't look as bad there, although it's a pretty distinct kind of drop. Let's go down to let's try 2 hours and see what we got here. Let's see, what do we have? Got it for now. Let's see. So obviously you got something going on up here, right? We got a little level that it bounced off of, pushed it down. We have a basing, all right? So we have a base sitting right here, right? That's an area where I think we're going to have a little bit of a hard time going through. Downside, looking for areas where we could get into buy. We are sitting in kind of a minor level, although it's driven pretty deep into that zone right now. So it looks like it wants to break. Let me drop this down even lower and see if we can get a little bit clearer of a picture. Hold on one sec. Hold on, I'm just looking at something real quick. I want to get a better view of it very quick. See. Line candles. No. I was trying to see. Sometimes depending on who the broker is or who the data comes from, it looks a little bit clearer. Let's see. Let's do. I don't need 1 minute intervals. Let's do 30-minute intervals here. It's basically the same thing. It's a little bit clearer. All right, so here, a little bit clearer. So on this one, again, I'd be looking for, it's kind of the same thing down here at the bottom. Is it gonna let me do an indicator? No, it's gonna let me do, oh yeah, draw. Right in here, I want a line. Yeah, line works. Of course, I don't know how to draw the line. Oh, there we go. Right in here. Okay, so this price is approximately, let's see, 176. So it looks like the last time the price was here, we had a gap higher. So it's showing me that we do have some sellers, or I'm sorry, some buyers sitting in this level right here. Okay, and again, mark off the same top is where we'd be hitting here. Okay, as I said, we just came off a basing level right here. Okay, and again, what did we do? Fast drop, sideways movement, pop to the downside. We ended up grabbing a little level here, but we came back up to grab more sellers to punch through it. So for me right now, I would say I'm most likely going to be bearish this position. That's just what it looks like until we come back down to here. If we can get down into this the 276 range, it looks like that's probably where some buyers are going to step in. The last time price was there, they did have a nice gap forward. So, but I would be very cautious if anything pulls back into this zone up here at the 180. It does look like that would be an area where sellers were going to come in. So I'd be a bit cautious with that. Dropping down again, you can kind of see the same idea. And again, people are like, well, does it work here? Does it work in stocks too? Yes. You guys see the level of basing right here? Right there. There's your level of basing. A drop, you're sideways, you're pushed down. What did it do? Just missed it, hit it, pushed all the way down for definitely a 1 to 3. Came back up again, hit it again. This is touch number 2, touch number 3-ish. Again, continue to push to the downside. That zone that we were talking about over here, if you wanted further refinement on it, again, you can take it down to the actual piece of the gap. That would put you at about, 275, 77. Looks like where that range would actually come in again. And there will be a small level kind of sitting around here, the 277.50 range, about $1 from where we are right now. But what I would do, again, it's a lot harder. I mean, I'm looking at 5-minute interval candles right now. So again, a lot of this is, this was at the end of the day. This is not the after hours prices, but kind of see where we are. This is probably a good zone to kind of keep in mind for next time. As you can see, not only did it slow down in base, it turned it away here, and it turned it away here, and it did even less. So that's an area to kind of keep marked off on your charts. Has it on Thursday, and was looking to get some puts. Yeah, so here's the problem. You're looking to buy some puts, I'm assuming is what you're talking about. Here's the problem with buying. The VIX is probably, in Apple, is probably still high because we're so close to it. You're going to have that, you're going to have that volatility crush after the numbers actually come out. So there's going to be a lot of speculation, and the actual volatility gauge right now will be probably high. Just make sure that you're looking at the, the implied volatility versus the historical volatility for this. Because this is the problem. A lot of people say, oh, this is what we think is going to happen. So what they do is they jack the premium because everybody knows it's earnings time, right? So you could still be right, but because when you try to buy those puts back again, the volatility has been completely sucked out of it. You may not, again, because you're buying it, you're paying for that premium, right? So when you have that volatility crush, that's where you're going to run into some problems with this, and that's kind of the problem. Waiting till 2 days before news, they tend to get a little bit jacked. You typically want to do it ahead of time. Had you gotten in for something a little bit farther out here, you could have got into some weeklies. That may have been a better option, right? Because right now you're kind of in the middle of no man's land. And like I said, from where we are right now, you're only about $3 before we run into a zone that last time price was here. We took a nice little kind of bounce off of it. And even so, even if it can break through that, it looks like the last time that price was really in this level. I mean, price turned from here and exploded off of it in that same exact level. Like, see this candle right here? It did bounce off that same level before and launched higher. So 275 is a big figure that it likes. It looks like over here at like 268 was another nice little level that, again, price stabilized itself, and then bam, it gapped. There was a big difference in price. Let me drop to 15 and see if I can get a clear read on that one. Yeah, all right, so here's one too. Right there. See how this price came back down again, turned, and that was kind of the launching point? That's kicking in at 173. So it looks like it has some issues. Again, you will have again, earnings can really push this down. I wouldn't necessarily expect Apple's earnings to be great. Although I will say, and again, I don't trade a lot on fundamentals, but I will say with China coming back online again, their sales are probably starting to pick up. But the question is, are they picking up at a faster rate than what people are not buying them here? Would be the big question on that one. And again, services, they may, have picked it up in services. You could try buying, it's skip, okay. Yeah, I can still get the volatility across if I choose the long expiration date, like June. Yeah, but here's the thing. So yeah, June is a longer expiration date, but is June really that much farther away right now? And think is the crisis going to be over by June? So that's kind of the thing. It's like a lot of this is so associated with the decreased demand for all products and people not working and things like that. So June expiration may be better, but is it going to be good enough? Is it going to be good enough? Like, will we be beyond, or will everybody expect there to still be negativity by that point? So, like I said, uncertainty is one of those things that's what kind of makes the options market a bit more interesting, and it makes it fun. Don't get me wrong. That's one of the things I like about options is, with all dealing with the Greeks and the volatility and everything and the time decay and everything, there are definitely some interesting ways to put it. But buying a put on that one with a higher volatility, I don't know. There may be some better ways that you can do it, or at least protect yourself, do some verticals and stuff. About moderators were excluded. Are moderators excluded? I don't know. You try buying the puts farther out if you're playing for premiums. Yeah, and don't worry about it. Don't ask about bad spreads and volume issues. Skip, great idea, but here's the thing. Do you think Apple ever really has volume issues? No. Everybody loves Apple. Everybody's addicted to Apple, so I don't think that one's going to be a big deal. People get their $1,200. Yeah, they're paying for it. So that's what I have to say. There's a couple areas, in here that, definitely watch out for. Where price is at right now, there's definitely been some buyers here as well. You see how these candles are choppy. So we're in an area. Big question is, what I would say is if price is able to kind of continue to fall down for the next 2 days, if price can come down to this area, would it be worth taking buying a cheap, a cheap call, or something along those lines? Because like I said, if everybody in the world thinks it's bad, who's dumb enough to, be shorting it? So you got to kind of think about, hey, listen, if this market is positioning it lower, and lower, and for the next 2 days, this thing does nothing but come down in preparation for bad earnings, you may end up getting a pop off the earnings, not necessarily a drop. And that's kind of where, for a lot of people, that's kind of a big thing that they're like, oh, well, it's going to be bad. It's going to be bad. It's like, well, yeah, but the market knows it's going to be bad. The market pre-prices in the earnings ahead of time. And that's what a lot of people, and then what happens is people try to react to the earnings after the earnings come out. See what I'm saying? So, it should be interesting. Like I said, we'll watch it. If you're around tomorrow night, we can look at it again tomorrow night, see if we can get something a little bit closer. And, same thing, Wednesday is always a good day. The day before earnings is kind of see what they are. I don't have any options things up. I'm not actually allowed to trade stocks with my wife working for an advisory firm. But again, I don't mind pulling charts and giving my advice. No, priced in, isn't just a meme. Nope. No, and that's the thing. Think about it. If you guys have ever traded the markets, think about it. How many times were you like, yep, this number is going to be bad? And the number comes out and it's bad. And what does the price do? It goes up. You're like, why the heck is it doing this? It's because the market had already priced in the bad news. And what they were doing is they were waiting for the bad news to print, because then everybody that's sitting on the other side of the computer is like, oh, God, it's bad. I'm going to short it now. Well, if it's bad and it's supposed to go down, who's dumb enough to sell it to you, right? So what the market does is the market pre-throws it down that way so they can be the ones dumb enough to sell it to you. And then when they're doing all those sales, the price rises up and you're taking the loss, and then they're selling it back to you. So for you to get out of your shorts, you got to buy it back. And the same people that were dumb enough to sell it to you in the first place are the ones that are buying it back from you at, the better rates, because they're buying, they're doing the exact opposite. You're selling low, they're buying low, and they're selling high, and you're doing it the opposite way. So, yeah. Again, remember, market psychology is really how you get ahead in the markets. Think about who's on the other side of your trade. Like, what's happening, right? Why would somebody do that? Why would, if I'm going to buy puts, that's great, but wouldn't everybody else want to buy puts? Wouldn't everybody else assume that Apple's going to be bad, right? So just some cool, some cool stuff to think about, guys. And again, if you guys are joining the channel regularly, I don't typically go into individual stocks, but as my guys know, a chart is a chart is a chart. If people are buying and selling something, learning how to read candlesticks and price action. I mean, a candlestick is just a recording of price. You can do it with real estate. You can do whatever you want. These are areas and buyers and sellers. If you guys are big options players, there's actually some really cool strategies you can do with options. Day trading SPY using supply and demand. Okay, you can do some at the monies. Cut your risk basically at half, do 20 contracts and be shooting for $1,000 a day. I had a student that used to do it and he loved it. He was great at it too. He was really, really good at it. He'd wait till 10:30. He would buy some at the money puts. He'd put up about $2,000. All right. Yeah, it was about $2,000 he would put up. And he would take them off if he lost $500 and he'd take them off if he made 1,000 and it needed to move like 50 cents. He had a great kind of, great scenario. Like I said, I haven't looked at it for a while, but great strategy. Again, if you guys are good with them, using basically supply and demand, using that 10-30 reversal. Great strategy. Loved it. Guy did really, really well. I haven't talked to him in a few years, but yeah, great way to do it with options. All right. So with that said, I'm going to bolt. It's 10:30 now. If you guys want to join me for whatever nights, you guys are more than welcome to. Go ahead and join Discord. You're more than welcome to ask questions. I have some really talented traders. A guy that's been in there has been trading for like 30 years. Really, really smart. You can ask questions to anybody you want. We're just out here to kind of talk charts and have some fun. So I'll see you guys tomorrow night at 9 p.m. Thank you so much for coming out. You guys, Ketchup, Sir Beyond, and Skip Dash, thank you guys so much for following. And I'll see you guys tomorrow night at 9 p.m. Eastern. Take care.